Starting now, Equity Mates, with thanks to our mates at Spaceship.
Welcome to another episode of Equity Mates. It is that time of week again, Watchlist Wednesday. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. This is our favourite time of the week. Yep. We love all of our episodes, but this is the one that we enjoy the most.
Yes.
We get to sit back, relax, and speak to some of the best in the business as they talk about 3 stocks on their watch list. What better way to finish your Wednesday?
What better way to finish your Wednesday than with Watchlist Wednesday? And it is our absolute pleasure to welcome to the show an expert who has been on a couple of times before and is a fan favourite here at Equity Mates, and that is Henry Jennings from Marcus Today. Henry, welcome to Equity Mates.
Hi guys.
So we have 3 stocks on your watch list. Admittedly, as always, they're stocks that I'm quite excited to hear about. You've always got some pretty interesting insight, and we're kicking off with a Western Australia-based mining company called Gray Mining. The ASX ticker is DEG with a market cap of 1.8 billion. So Henry, why is Gray Mining on your watch list?
Well, hi guys, thanks for having me on. It's always great to be on your show. And always nice to be called an expert. I'm not sure I really justify that, but anyway.
All right, well, we'll finish the episode there. And
Thanks for having me. Have a great evening. Gray, DEG is the stock code there. This is a gold explorer in WA. They've uncovered something that looks pretty promising, I've got to say. They've been drilling like Billio at a place in WA. A Hemi is the resource that it's called. And they have made some pretty interesting discoveries. The stock's gone for a massive run recently as they've uncovered more and more gold hits, which has been pretty impressive, I have to say. And it does look as if this could be sizing up as something quite big in coming years. It doesn't happen overnight, of course. They've got a lot of drilling to go, and they're hoping to prove up a maiden resource in mid-2021, which I guess is pretty much now. We're in May, so we're not far off that maiden resource. So I think this is quite promising. The results have been very good. They've got a gentleman by the name of Andy Beckwith, who's the technical director. I met Andy some years ago on a mining trip out to Alice and Tennant Creek when Andy was the man in charge of Westgold Rover project up in Tennant Creek, or near Tennant Creek. And he's a very competent geologist, very competent manager, and very good at uncovering big resources. So I think this one looks pretty interesting, I've got to say. And the results have really driven this one higher and higher. That main resource, I guess, is now what the market's looking for. I got attracted to this by a small resource LIC, if you like. It's called Lowell Resource Trust, LRT. These guys have had a spectacular series of wins this year with a bunch of gold explorers and other minerals and material companies as well. But they've done really well out of a couple of gold stocks. And Gray was one of the ones they highlighted in a chat that I had with them. And then I looked at it and thought, wow, this could be pretty interesting. So it's not small in terms of market cap now for an explorer, but the results have been pretty impressive. So I think this has got a way to go. It is volatile. It has moved around quite a bit recently, and you do tend to see 5 to 10% moves sometimes in a day, but it does spike higher up through results. And it's certainly worthy to putting on your watch list and keeping very watchful eye on, especially if you do see gold pick up in the coming months, which you never know. You're like in a big city, that could happen.
Well, the stock is up over 700% in the last 3 years. So here's hoping, Henry, that it has another 700% to go. But unfortunately, we don't have time to keep talking about that because we've got 2 more stocks to cover. The next one that is on your watch list is one that a lot of people will be familiar with, TPG Telecom, ASX ticker TPG, bit over $10 billion market cap. Can you tell us, Henry, a little bit about the company and why it's on your watch list?
Well, we all know about TPG. It has been an absolute dog since it has merged with Vodafone and Vodafail, as it used to be called. But since it merged with Vodafone, it's gone through a number of issues, not least of which is the man in charge and the founder of TPG, David Teo, is stepping back from the business, which I guess is a significant negative, and it has been a significant negative. But we are seeing some signs that maybe things are improving. That they've suffered, I guess part of the reason they've suffered, of course, is bedding down any kind of massive merger is always tricky. There's a lot of egos at play. There's a lot of people as toes to step on, integration risks, trying to get those synergies out of it. And of course, mobile telephony is a pretty competitive space as well. They're also pushing hard into 5G, which in Australia seems to have gone pretty quiet. It's going well overseas, but in Australia, apart from Telstra banging the drum and a few spectrum auctions recently, it was the Great White Hope, and now it seems to have been sort of relegated a little bit. But they are going hard into 5G. Of course, international travel has affected them as well. The Vodafone guys do pick up a lot of money from international roaming and data charges, etc., as I'm sure many of your viewers will be aware of when they get that shock bill when they've been roaming overseas. So there are a number of headwinds, but it's just looking interesting at these kind of levels, and we have seen the first signs of a little bit of a pickup in the share price. I think it may be a little early, and we still need to see some continued signs that things have bottomed, but it does look interesting, especially when you look at Telstra and what else is happening in the sector. There was even one fund manager suggesting that Telstra would be involved in some sort of M&A activity, which would shine the light a little bit on TPG. But the David Teo thing obviously has been a serious negative, as has international roaming charges, etc., with COVID. But I may just be starting to turn the corner price-wise at least.
Do you know what's happened? I haven't actually caught up with the David Terra stuff. Do you know where is he just taking a step back? And do you know who's stepping in? We know the value of management when it comes to, investing in companies. Do you have an idea of, I guess, the succession plan there?
They do look as if they've got a succession plan in place. That's certainly the executive team is being finalised. I mean, David has done an extraordinary job building this business up to what it has become in terms of the force that it's become, and then merging it with Vodafone. I don't think he's going to be going anywhere else, to be honest. Yeah. He's probably going to be enjoying a long and well-earned rest from corporate life. He was always very media shy as it is, always very keen to stay out of the public limelight, and I suspect this will continue, and we will just see him enjoy the legacy that he has clearly provided with TPG, and hope that the transition to this big merged company with Vodafone goes well. But certainly they do seem to be finalising that executive team. At least that's the last update we saw from the company's quarterly. So that would be a positive. Hard to replace though.
Yeah.
So, Henry, we've got one more stock on your watch list, and this is one that I wasn't familiar with. Harris Technology Group, ASX ticker HT, the number 8, $31 million market cap, so pretty small company. It's as I said, I wasn't familiar with it, so when I googled it, one of Australia's largest resellers of technology products and solutions aimed at small and medium businesses, and the operator of 2 technology-focused e-commerce websites. Why this micro-cap stock on your watch list?
Ren, I'm surprised that you haven't heard of this one. I'd have had you down as a gamer, and this is one of the. One of the. I think. No, well, I'm certainly not. But this appears to be one of the go-to businesses for gamers, and they're very much pushing that side of things for the expansion plan. Harris Technology has been around for donkey's years. It used to be part of Coles at one stage, and even Wesfarmers had it. They sold it to Coles and kept Officeworks. That was a good trade, wasn't it? But for the last few years, it has been owned and listed on the Australian Exchange. It is a minnow, and I always laugh when people say, it's one of Australia's leading technology providers and has a market cap of 30 or 40 million bucks. So clearly the others are pretty hopeless. But these guys very much staking their future on the gaming side of things. If you look at the website and you go through their business, they're very much concentrated. They're not a JB Hi-Fi. They're not that side of things. They're not really so much the consumer electronics side of things. They're more the small, medium businesses and the technology, the geeky side of things. Even their website looks a little bit geeky to some extent, but they are putting a lot of store in the expansion of their gaming side of things, which I guess due to COVID has had a big leg up. So it's not a huge one. It's one that I've just recently added to the small cap portfolio that I run. They have raised around $5 million at 12.5 cents. So that has kept a little bit of a lid on the price, but it is giving that optionality to push into expanding their market. As I say, they've been around a long time. They've had many false starts, but it's not all that widely traded. But every now and then it picks up, and I'm betting that once they bed this capital raise down at 12.5 cents, then we should see them poke their head back up towards 15, 16, 17 cents again as this gaming side picks up some momentum.
Henry, Bryce is known as the retail whisperer here at Equity Mates. He has a knack of having his finger on the retail pulse, and he's a big fan of a lot of the bigger e-commerce stocks. So I'm not sure if this one's come across his desk.
No, I haven't heard of it.
Haven't heard of it?
No.
But when we think about e-commerce, we think about, the big players. Internationally, we think about Amazon. Here we think about JB Hi-Fi. How does Harris Technology Group, want to compete with these bigger guys? Because I'm sure they're all thinking about gaming and all thinking about supplying equipment to gamers. So what's Harris Technology Group's edge here?
I think it's more geeky, to be honest. I think it's the more hardcore side of things. It's not your PlayStation or your, that side of things. I was trying to figure another game that I could think of, but I'm not very gaming myself. But this is more the geeky side of gaming. This is if you want to build the optimal gaming PC, all the bits you need, all the cards, all the graphics cards, everything like that you need. And it's certainly for SMEs as well. Far more geeky. It's not just pop down to JB Hi-Fi and pick up your Apple laptop. This is kind of custom built to order stuff as well that they've done. They have been around. They were around in the dot-com boom. They were one of the guys that was looking really cool in the dot-com boom as everyone raced into technology. They used to have a big red warehouse up near Foxtel on the Lane Cove tunnel near Epping. So I used to go there I used to go to Sky quite a lot and pass it the whole time. But they've been around in one guise or another for a while. I think that their time is coming. It's not going to be a JB Hi-Fi by any stretch of the imagination. It's more that, remember Dick Smith when they had all the little bits and bobs that you could buy, the hobbyist, the sort of the hardcore build your radio from scratch kind of deal. This is more the Harris Technology side of things, but they have done pretty well recently in growing sales. They had record-breaking Q3 sales of around $10.5 million last quarter, which is pretty good. Total revenue of around $30 million. So they're getting some traction, in not just in the gaming side of things, but it does look potentially a little bit of a left field technology company with some pedigree, I guess, some good and bad pedigree to some extent.
So Henry, that covers the three companies that we've spoken about, two with reasonable market caps, one with a very small one, and you did mention there that you're running the small cap fund there at Marcus today. How many stocks do you hold in the fund? And if you can just give us a bit of some insight into how you're running that and how our listeners can get a bit more information to what you're doing there.
Well, they can always sign up to a trial at marcustoday.com.au, which will get them a look at that. It is a model portfolio rather than a real money fund. Bear that in mind. But it has around 35 stocks. And the idea is to try and take some of the volatility out of small cap investing, because it is quite hard to sell that to people coming to small caps from a sort of standing start. Some of the volatility that we see day to day is quite extraordinary. So if you have more stocks, and it has quite a large cash holding as well, and also holds some BBOZ, which is one of the ETFs geared to downside in the market, because I always feel that even if you're in a Formula One race, sometimes it's good to have some insurance in case you go off and hit the barrier. So it's nice to have a little bit of insurance there. So mainly concentrating on obviously tech stocks, smaller tech stocks from the range of some of the ones in cybersecurity like TNT, or we've been very successful with TNT. That was a 10-bagger that we had in that one, but also some of specialist situations like National Storage, which is slightly less exciting, and other stocks in the portfolio as well. So although it's a model portfolio, it's updated every day. We keep people in touch with what's going on. As I say, I added De Grey to the portfolio not that long ago at $1.24. They instantly went to $1.55 and thought I was a genius, and they were back falling out of bed again, back towards where I bought them. So some of them are more trading situations. Some of them are more long-term thematics in terms of emerging technology, cloud technology, medtech especially, with stocks like 4DX and Volpara. Those sorts of stocks also attract. So we've had a modicum of success, I must admit. It's been the performance has been pretty good, yeah, we try and take the volatility out of that performance as well, so we don't get 10% gyrations in the portfolio on a daily basis. That we try and smooth it by having a lot of stocks and also having a bit of insurance as well, and quite a high cash level.
Nice. Well, if you'd like more information on what Henry's doing over at Marcus Today, jump over and have a look on their website. But Henry, as always, absolute pleasure to have you on the show. Thoroughly enjoy hearing you talk about these small caps and what you're doing, and I'm pretty certain that we'll have you back on at some point in the future. So thank you very much.
Thanks, guys. I'd love to be on again.
You will be. And that does bring us to the end of another episode of Equity Mates. Hoping that you were able to take some value from that episode that'll help you on your investing journey. We certainly always love chatting to Henry, but Ren, tomorrow we've got NFTs. No. Lumbers.
This is the episode we've been waiting for all week, just because we love the title of the episode. Tomorrow we'll be talking about why the hottest commodity in 2021 isn't NFTs, it's dead trees. Lumber is on an absolute tear. We're going to talk about that. We've also got a couple of other news stories that we're going to have a bit of fun with. So join us, same time, same place. Until then, thanks for watching.
See you then.
Equity Mates, with thanks to our mates at Spaceship.